confirmation. So why should the auditors ask a balance directly from the customers? So there are several reasons. One of them is to provide a direct external evidence about data's existence. You need to know that these data exist. In companies, there are ghost data, not only ghost employees. So for you to know that these data exist, you have to confirm from them. And also, you need to protect your clients. Remember, your client has the right to receive cash. Because once you sell goods to a customer, you have the right to receive. So as an auditor, at the same time, even though you're trying to confirm the balance of receivables, you're also trying to ensure that your client has the right to receive. You are acting as a factor somehow. That's what we can say. The third reason, it can also help you as an auditor to confirm the effectiveness of internal controls by counter-checking internal controls against third parties. So one of the internal controls that we have in the receivables is the reconciliations. But apart from reconciliations, data confirmation is also a good internal control system. Finally, it will also review evidence of items in dispute. So as an auditor, you can know areas where the customer and the client dispute. For example, quality, poor delivery. So these, or maybe lack of customer care, all these are going to be identified during the confirmation period. Finally, on the confirmation, what are you going to do as an auditor if management refuses to comply with the results of receivables confirmation? So, for instance, you are saying the customer owes you 12 million, but the customer says I only owe 6 million, or I only owe 4 million, and it has been resolved that it is correct, but the management is refusing. What are you going to do? So there are three things that you're going to do. First, you should discuss with management and explain to them the importance of a direct confirmation. So you ask the management, I've obtain a confirmation from your customers, and your customers claim that they only owe you 2 million instead of 14 million. So explain to them why is it important. Because you say it is important because one, it's going to help improve your internal controls. Two, confirmation will also confirm that your receivable balance is correct, and also it will help resolve disputes with the customer. Because if you highlight this, I think they'll be able now to understand. Tell them the importance of confirmation. If they don't adjust what you're going to do as an auditor, you should consider the materiality of receivables. You know materiality. Materiality is of receivables should be more than 1%. Remember what we said about materiality. Assets is 1%. So if this amount of confirmation is material, you need to take note of the impact on the auditor's report. Now, if you see that it is very material and these people are refusing to comply, you should consider other ways of finding evidence. Maybe you can call the customers directly, or you can warn them that to say if you don't adjust, it will give you a wrong opinion. Furthermore, if doubtful, the auditor should qualify his report to the existence of their materiality. So we are going to provide here a disclaimer of opinion where we are going to say we did not get enough evidence on receivables confirmation because management did not allow or did not adjust or did not accept to adjust the receivable balance. Hence, we cannot provide evidence on the financial statements. We call that as a disclaimer of opinion where you just conclude that we are failing to provide evidence. Okay, so that's receivables confirmation. So before we go, this is what we have done today. Where are we coming from? We have gone to understand the entity. We have planned our audit. We have understood the entity. After understanding the entity, we have identified audit risks, inherent, control, detection, Then we have identified those risks which are significant. Then after that, we have determined the materiality levels. Then now we are going to the field work to collect evidence. So in the process of collecting audit evidence, we are supposed to know what are the assertions. So SCC cover accuracy, completeness, cutoff, rights and obligation, existence, occurrence, then valuation, for instance. Then we also have to know what are the sources of evidence. Where are we going to get our evidence? So we said DA, D3 or DADA 3, documents, assets, accounting system, then third parties. Then finally, what are the audit procedures? Analytical, inquiry, inspection, recalculation, performance, confirmations. Alright, then after that, we have said we should now look at how should we gather our evidence. Now to gather evidence, we have got several techniques. One, stock taking, which is not crucial, just have to have thorough knowledge. Then we said the next thing is to use auditors experts. So you can use somebody who has no knowledge, or who has good knowledge in auditing, but he would not be an accountant or he would not be an auditor, but his work is going to help you in auditing. Then after that, we said the other way you can collect evidence is by using a data's confirmation. Now at this level, we can start looking at accounting standards and auditing them, because you have knowledge of audit evidence. So we can learn a standard, let's say IS1, and audit it at the end. So audit continues, but from now on, we are going to split our lesson into two. The other day, audit, the other day, accounting standards. So we should agree, weekend I'll find time, we should look at we should start looking at accounting standards. Our first standard will be IS1, which will be known as IFRS 18 from next year.